Hello.
Okay. All right, Fari. Let's just go. Where are we in Sigma land here?
Well, we're up, and up and up, and so everybody believes that the Auntie Jeanette will come in to rescue again and again and again. Somewhere in there, the game will stop. As they say, it ain't over until the fat lady sings, right? So we are at, we made another new high in SPX. We're about to make new high in Dow Jones. Of course, the data this morning is not all that hot, but we're only down two handles. Russell made a new high. That's the risk is back on. Everybody's happy-go-lucky. Let's move in. Sure.
What?
And then the Dow transportation is not. Look at the sell-off in the utilities.
We were
It's been,
just
they've been,
gonna
we
go.
were talking
Yeah.
about those. They've been
Yep.
killed.
They've been absolutely killed. I mean, forget. They just made a new high too, by the way. But they just, this was what in mid-April, January. Excuse me. And then they sold off. Let's see what else we have. It just you look at and then you get no confirmations on. Well, we made it just barely made a new high in advanced decline. The leading indicators. Momo is not at 10 and above. It's only 5 plus. And McLennan Oscillator is only at let's see. Last night closed at 53. So you got a lot of non-confirmation signaling. You go to trend, 5-day trend, not a regular trend, because that's a little bit noisy. Look at 5-day trend; they're both on the sell, both markets. NYSE and Nasdaq. I mean, somewhere in here, we're gonna have an issue chart-wise. We just gone too far, too fast. Somewhere in here, there's going to be an issue, and we're going to find out why.
What about
Plus,
the TLT?
all the
Fari?
recent moves have
Fari?
absolutely no energy.
What about the TLT?
Yes, sir.
The TLT has absolutely gotten smoked, and that coincides with the utilities here. I mean, it's
Correct.
just, and you're talking about Auntie Jeanette and what she's planning on doing. It's just Dennis was looking at it. He's not too worried about interest rates going up. He's just looking at just hey, why do I want 3 or 4% when the market's taking off and new all-time highs? I dump this and I buy Apple and Google and all the whatnot. What's your take on that?
Exactly.
What's your take?
Well, you noticed yesterday the article, I think it was it Reuters or was it Wall Street Journal that said a lot of major big players in Apple, hedge funds in Apple, they start dumping in December and January as Apple throttles up to 130 area. Some of the big guns have dumped quite a bit. And I just brought TLT up. I usually don't look at TLT. Every once in a while, if I put a trade on it, I do. I see what you mean. Look at the monthly bar. Holy macro. Straight up in January,
when we
and
were
then
worried
straight
about
down.
Greece. Yeah.
Yeah, exactly. Somewhere in here, we're gonna have an issue. The market timing to me is a search for the catalyst, because the charts tell you what's about to happen, but it won't tell you what the trigger is, the catalyst. That's the one you need to be on full alert. That's why we have watch commanders. You just got to watch all different news and markets and any abnormality, because that could be it. You don't know. We're not here to predict the news. We're in the business of predicting what the market is going to do, given various news types. So now Brad Sullivan, our hedge guy, he has been long IWM. I ran with his coattail. I put some IWM call spreads on, and somewhere in here I'm going to cover it. He's going to probably stay a little bit longer. He's got a little better, stomach for that. But I'm no Brad Sullivan, so I'm going to take the profit there. If need be, I may have to put it on again. Sometimes you got false positive. So you go for it. It's not there. You do it again, and then it comes. We'll see.
Okay,
It's just warning signs all over.
So far, now you just said the market has come too far too fast. You're sounding a little bit bearish. How are you approaching it? Like, how are you looking and positioning yourself here for the next big move?
Well, you got to be long and short. I mean, the trick in this business, in my opinion, whether right or wrong, only time will tell, is to be long and short. So, for example, we're getting long very few careful energy names, okay? And 60 days, 90 days, 120 days out, okay?
You got a name for us?
Because we don't know exactly where the trigger is.
You got a name for us? You got a name, specific stock that you like?
You want me to give you a trade too,
Yeah, in the
Murray?
energy
What am I
sector,
supposed? Should I throw in a couple of blondes? What else do you want? Jesus.
That's why we want a stock pick from Fari. He always has good calls. What one do you like? Which, if you had to, and you're buying energy stocks, which one are you looking at?
Well, okay. Here, hold on. Let me look at a couple of.
Oh, you're going to get
I'll give you a couple.
Now we're getting to the good stuff.
Oh yeah.
No, hold on. I'm going to give you a. I'm going to my. Yeah, I take notes. Okay, I take a lot of notes during the day, and I do what's called comparative analysis. So, let me look at a couple of stuff we look at. Here are the names we looked at yesterday. Okay, and we put 2 trades on, but give you the names we looked at. SLB. This is OIH components first. Oil services. Okay, and then the other one is XOI, which is integrated oil. All right, and this would be a nice exercise for everybody. I won't give you the solution, but I will show you what to look for. Okay.
Okay.
I'm not going to fish for you. I'll show you I'll teach you how to fish. Okay. Here we go. Look at SLB, Halliburton. That's Schlumberger. Halliburton, Nove, which is that's
National Oil.
Novarco, right? New something, Novarco, NOV, BHI Baker Hughes, and Waterford, WFT. Okay, and then OIH itself too. Okay, as an ETF. Now, what you want to look at is price. Okay, and then you want to look at the next 3 months volatility of at the monies. So you write down at the monies of the next 3 months. Okay, just make a little table. So you got price and volatility next year, because they're not going to trade all of them. I mean, you need 3 months out there because they're going to trade in pairs. Like March and May or March and April right now. Okay, write those down, and let's take a look at it and see what the data hits you. You're going to see unusualness between volatilities and price. That's what you want to focus on. Okay, of course, don't forget that sigma channels and all that. I'm talking about just a strictly quantitative look. And write it down. Don't let it jump back and forth. Or create an Excel sheet. Put it in an Excel sheet. So Subber is reduced to documentation. Reduced in writing. So and do it quickly, like within half an hour. You're going to do all of that. Boom. Because as the markets move, these numbers are going to change slightly. But you want to look at it kind of static way. Don't do that opening of the market. Things are going to be a little bit wide. Wait until Europe closes. Okay, that's one page. Let me give you another page. Let's go to XOI. And here what you want to look at, and I did actually, I use market cap. Okay, I definitely want to see what my market caps are. So I didn't have a sheet for this, so we created one on TradeStation. Punched in the names. The TradeStation does a real-time market cap analysis through what's called radar screen. You come to the radar screen and boom, punch the names in, they all come out. Look at VLO, PSX, Oxy, Cope, which is that's ConocoPhillips, BP, that's Bad Karma BP, CVX and XOM. So Exxon, Chevron, British Petroleum, ConocoPhillips, Occidental, forget what PSX is, and then Valero, VLO, okay? Do the same thing. Put the dollar value, current value, and look at the next 2 to 3 months forward. Which pairs are in March and April or March or May, okay? And right there, you're going to see the data will talk to you if you look at it carefully. What you want to look at is, because we want to go out, we don't want to pay a lot of volatility, right? So lower vol is good, and you don't want too low of dollars because the juice isn't there. I need my VIG. Come on. This is Chicago. I need my VIG. So Waterford, for example, falls out. Why? It's a $12. Where's the $12 stock is going to go? Okay? And I would suggest you look at somewhere in there around $60 to $100 stock. Somewhere in that range would be good. Not too low, not too high. For example, unless you want to have more appetite, okay, you have more risk appetite, yeah, I would look at CVX. Okay, volatility is 21. Remember, these are at the money calls. At the money calls. Now, why are we looking at that? Why? What's the whole thing there on the long side to go to these? Well, look at how they behaved. Look at how they behave, how oil has behaved, the underlying. The key thing is WTI. We've had series of days where this thing is flip-flopping back and forth. Do you guys remember, and remember history repeats itself, or the past repeats itself in different morphing environments, morphs into different ways. Remember when S&P, and they pay for it right now, S&P downgraded our paper, August of 2011, you guys?
Correct.
I don't remember that, but I'll
Okay.
believe you.
Okay. Did you remember how the bars were that time? We had like 4 days back-to-back, alternating red, green, red, green, red, green, or 4% each. So huge volatility intraday, okay? Big range day, 4 days in a row. Okay, if you do any, and then this is where Brad Sullivan comes in, because he trades what's called statistical anomaly. If you look at statistical anomaly, you'll see in the past, when that pattern occurred, we're higher. 3 months forward, 6 months forward, we're higher. Okay, it's making a bottom. It's trying to make a bottom hard. Now, I don't think oil necessarily. The stocks are obviously different than oil because oil being especially crude being a very, very large commodity, dollar rated, very, very large. We can't go too far out, but I know we got a lift here. So to do that lift, I'm not going to go out there and to bet on a commodity because I'm not an oil trader. But here I'm a stock trader, so this is how I'm going to be long through that sector. Okay, so I look at oil, get my trigger, then go through a detailed analysis of which asset I want to be in and why, based on its price and its volatility, and of course chart pattern. All right. Now I'll give you this hint. We took a trade of each page so far. Okay. We'll continue to do at least one more, so it'll be like 4 names. That will be on the long side.
Do you
On the
follow
short side. I'm sorry.
Fari, we only have like a minute left here, and we're coming.
I'm sorry.
Yeah, we're coming near the end of earnings season here, and we still have some of the retailers to report. And I know those aren't real volatile and real high flying stocks, but are there any retailers that you follow and you may be doing a lotto trade or putting some spreads on with earnings coming up? Walmart. What about
no,
Walmart?
we're basically done. We're basically done with our EPS. And by the way, we didn't have a good month. We did. I mean, the January to February EPS this season was not the best for us. We're actually we took our profits. We're doing some repairs right now. But no, I don't see. I see very little on our calendar that we may be of any interest to it. Probably zero. I just have to bring up, take a look at it. That's why I start doing more. See, I do earnings for first month of the quarter, and the next 2 I do market timing. That's why I'm more emphasizing on market timing. And on the long side, I want to be in energy names. On the short sides, I'll probably want to have some puts up on some of the indices, some of the ETFs that are pushed up too far.
Okay.
So you think energy could still have a little bit of gas here in it?
I believe so. Yeah. I was reluctant to go in early. I didn't want to be the guinea pig too early on. But, I think so, we do. And now the problem with energy is going to be down the road. Here's the caveat. Problem with energy is that we're going to run out of space to store it. That's coming up in about 2-3 months. That's where the problem is going to be. And then oil probably will go up higher, but employment will drop. The oil patch will be in depression because they have to lay off people because there's no place to store them.
Okay, Fari, before you go, Rob Hood's in the chat, and he just if you could join the chat real quick and chime in with
your questions for you.
with your that philosophy on the hint that you gave here, maybe a short version of it if you have time, that'd be great. If not, as always, we enjoy having you here on Wednesday morning on Benzinga's Pre-Market Prep, brought to you by Market Fari Hamzei Analytics, a great and colorful look at the markets. Thanks, Fari.
Sure, we'll do.
Thanks, Fari.